Welcome to Liquid, how CFOs outperform. I'm your host, Tom Gavaghan. On today's episode, we're talking about the grunt work of corporate finance. Moving money and ensuring liquidity is one of the most fundamental parts of the business, yet the corporate banking system in the US remains incredibly archaic. It takes minutes to open a personal account from your phone, but it can take 45 to 60 days to open a corporate account. My guest today is here to fix that. I'm joined by Kartik Kaushik, head of RBC Clear. Kartik isn't a traditional banker or a technologist. He's actually spent the first decade of his career as a consumer marketer at Unilever, where he helped create the first e-commerce platform in India back in 2000. He views himself as a customer advocate first and foremost. We're going to talk about why the transaction banking industry is challenged in driving transformation, how RBC Clear is reimagining the client experience and efficiency, and reducing corporate onboarding from 60 days to the same day, and why modern treasury teams needs to stop managing bank relationships and start managing true working capital. Kartik, thanks so much for joining us.
Thank you, Tom. I'm excited to be part of this conversation and exchanging perspectives.
So we'll go a little bit through kind of your background and kind of current position, but I do think your background is worthwhile talking about because it is quite unique. I think it's quite fascinating. As we mentioned, you didn't come up through traditional banking ranks or in technology like we see a lot of people coming in to the conversations here today. You spent your first 10 years, as mentioned, at Unilever. So how does a consumer marketer end up running a corporate cash management business at a bank? How does that customer advocate lens change the way you look at corporate banking compared to, someone who might be in your shoes as a lifetime banker, for example?
As I jokingly like to say, accidents happen and mistakes also happen. But on a serious note, I think the journey is quite interesting in its own way and rewarding. I had the opportunity to start in consumer marketing, and I had the opportunity to build new brands and business lines. That took me into a very different direction where I had the opportunity to see the power of technology and how it's going to change the business. And that was the convergence that happened way back in 99, 2000, where we set up the first ever e-tailing business in India with Unilever as the primary sponsor, but without using Unilever's name or capabilities or any direct reference, because it was a challenge of conflict of interest in the marketplace at that time. That got me exposed to very exciting impact of what technology would do to the business models. I moved into a very different business model after that, which is the technology world, where I got excited about building out a global brand in the technology space from India, rather than staying with the low cost, high value, large capacity based models that our peer services organizations were running. So I had the opportunity to build out a business that today happens to be one of the main product businesses in banking. And that was my tryst with both technology and banking. That got me into this mode. I then had the opportunity to cross over and work for one of the world's largest financial services organization, which is Citigroup, and spent 12 years there. And I ran different businesses, including being the CEO of Citi India for the consumer and commercial business, and then moved in to do the current role at RBC. So it is an interesting journey. I did have the opportunity to learn, but going back to your question of where does my customer advocate story make a difference? I think large organizations, particularly as we grow, as we scale, we tend to start getting focused very narrowly on our products, our functions, our engineering, our line of business, our geographies. And many times we stop looking at the end-to-end client journeys. We forget that the impact that we need to have is on the effectiveness of the client and making their lives better. And our products, our services, our engineering actually serves that. I think I've carried that advocacy, and therefore I have a slightly different lens. And my varied experience helps me bring all of that together from a client lens. That's what I would say is my slightly different nuanced.
I think very viable, or actually very realistic and rather endearing, I would say. I'm sure many on the call or on the listening can relate to that and would like that from all of their banking partners. I don't know if that is reciprocated, I would say. But I guess let's talk a little bit about RBC as well, which stands for Royal Bank of Canada. So traditionally not doing cash management directly in the United States. Can you help give the elevator pitch of RBC Clear and kind of what the mandate was to building RBC Clear?
Sure. And particularly for your audience, I will say this is the first time a bank is going to be in the business of putting clients in control of their working capital journey. The attempt is to do this in a real-time, frictionless journey experiences, and it's enabled on a modern digital age banking platform. Therefore, the focus is on creating unprecedented client experiences. An oversimplified view, Tom, is that we are taking the grunt work away and letting the treasurer and the finance team focus on what they are mandated, which is to make the working capital high efficiency, high yield, high value for their business partners, and not have to focus their energy on managing the bank or the banking ecosystem or the money movement processes. So that's fundamentally what we are attempting to do in this journey.
In terms of that mandate, there's a number of ways you could go about doing it, right? You could acquire, right? You could just roll out legacy things, legacy infrastructures and things like that. You guys took a different approach ultimately, kind of starting with the customer, I think building with the customer ultimately. I guess the question isn't why do that. I guess the question would be like, how did you do that ultimately with your customers specifically? Because again, I think that's a unique approach rather than just mandating and jamming down maybe archaic ways of working like you've seen with other types of banks.
Very fair question, Tom. I think two bits of context. One, you asked me why RBC went down this path. So if you look at the marketplace and we realized that we were actually not in the wallet of transaction banking, which is almost a third of the institutional or the corporate wallet. So it was a logical adjacency to an existing client base. And it was an opportunity for us to expand the depth and width of our offering, to be a more comprehensive offering to the corporations that we were servicing. So it was a logical business model to offer. But then, and the good news with RBC is that when they look at a business model, the operating model is about what's good for the client. How do we do it right there? And that was part of the mandate when I was brought in to say, how are we going to think about it? So when we put pen to paper, we realized that the typical marketplace characteristics were older platforms, 30-year-old platforms, right? Money movement being fairly manual with technical, operational, human in the middle is possibly the nicest way to say it, right? Fairly large scale, highly regulated industry. So we were having a situation and understanding where the clients were experiencing a very comfortable, frictionless, a highly traceable experience when they came to their personal money. And when they came in and they started their day job as a treasurer, then they were subject to not having those experiences, not having that context, not having the benefit. So there was a great asymmetry between where the technology had enabled the money movement in the consumer space versus the corporate or the institutional space. And as we researched that, as we understood it better, the big question was, do we take and build more of the same, or do we actually try and do right by the client? And that is the choice RBC made. So we started with that lens. Now, once that choice was made, there was no playbook because this hasn't been done. I mean, digital banks for the consumer side have been done for the last 10, 15 years. This has not been done in the institutional side. So how do you start? And then the bigger question, as when you ask me what the customer advocate helps, the bigger question was when you're doing something new, you don't want to start with what you think is the possibilities. You want to start with what actually is the pain points and how do you take the life of the client to a better place. So the first thing we did was to set up a advisory team of our clients, our biggest clients. 28 of them joined us. And we said, we want to co-develop this with you because we want to make sure that we are doing something that meets your needs and takes it forward. And we will bring the heft of reimagination. So that's the quick context, Tom. So happy to speak more about that. But that's really why we took the approach we took.
That all sounds like, I think, really, really strong. Let's zoom out one more layer, I would say. As I mentioned, I can go on right now personally and I could open a bank account very, very quickly. A corporate treasurer or a treasury team cannot do that necessarily or has not traditionally been able to do that. Why is the US so archaic compared to other parts of the world, perhaps, when it comes to this?
The emergence of every industry, every segment, every capability, there's a bit of history and there is a bit of where we are today, right? Banking platforms, particularly money movement platforms, because they are mission critical, right? Over the years, the platforms have remained largely the same. But as things evolved, we've kind of tended to add on to it. Like as they say, you're paving the existing cow path, right? So it's incremental, a lot of new capabilities, processes, everything got added. But inherently, it became the default standard and people were happy with the incremental. When the digital era came, they added a little bit of the front end capabilities for the client. But the inherent process did not undergo a change. And as every business knows, right? I mean, if your business is running, and typically people say, if it ain't broke, don't fix it. The point is, it was running, it's large scale, mission critical money movement, and there was no real urgent need to change it because the incentive to change was minimal. It would require a lot of reimagination and restructuring and re-engineering without really an upside for those who were in the play. And that to me is one of the challenges of any industry. Imagine if you and I had to have the Walkman with a newer Bluetooth connection and a newer, dongle. And if that's how we were building it, can you imagine where we would have been? And it's effectively, I'm sorry I had to give you such an example, but that's effectively how the industry has been. So it's not necessarily a reluctance of or the lack of capability. It's a reluctance on the transformation of the business model and the upside or a business case to have done that for people who are in it. And that's part of the change. The second part, which we must recognize, is that in our personal lives, switching adoption is our decision. And in corporates' life, when they have to make payments, they are deeply embedded from an ERP all the way into a bank. The plumbing, the piping is very tightly integrated. So it's as complex as moving from our landlines into a 5G. And that's part of, again, how much do you unwind? How quickly do you unwind? How much of that investment is, recovered, recouped? Those are all considerations. So all that went into the situation of the appearance of a fairly legacy heavy architecture in the banking ecosystem. Many of these, as we looked at the examples, is the reason why others had leapfrogged in different parts of the world and we haven't. So that's the context. That's what holds us back today.
Yeah. So what you're saying, I guess, is that the parts that have been digitized over the years are probably the easy parts to have been digitized, but the middle piece, right, the coordination layer is still, again, that archaic piece. I think you joked originally, you said people making money on corporate onboarding are the FedExes of the world, the DHLs, the UPSs, the lawyers and such, right, that are all sitting in the middle of that. So there's no economies of scale here, right, at this point. And I guess why is that ultimately?
So it's a very beautiful question. It's a logical question. So, as I go back to when you asked me, how did we go about the co-development and why we took the clients along? As we went to the clients and said, what is it that, we have in terms of rights? So they said, hey, you have the right to play, right? You have your balance sheet with us. You have the presence in our wallet, right? So you have the right to play. But the right to win will come when you solve for what we have been struggling with. And the struggles are common. So the question that you asked, Tom, is actually one of the first things that they point out, which is, hey, you know what? For an account to open, it's 45 days. And the clients say it in a very interesting way. They say, we don't see the K in the KYC for the bank. And that's a very deep commentary, right, from a banking perspective. So if you now unpack, and I'm going to give you a little bit of an anecdotal journey, right? And let's take onboarding for a moment. So the 45 days on a good day, right, is the default. But if you had to open the second account, it's the same process again for another 45.
It's crazy,
right? There are no benefits of the existing that's going in there in that process. So inherently, you can understand. And when I said it's ripe for transformation, it's because there is no underlying process reimagination that happens. So let's step back. What did we do, right? When the client said this to us, we said, you know what? Let's start with what we do. And I'm going to share this with you. In Canada, we had our journey as well, right? We do a bit of this business in Canada. So we looked at our own process, approximately 67 days for that journey, for the account opening. Then we said, if we are a normal banking organization and we think we have to disrupt, maybe 30% efficiency is fantastic, because on a normal day we would have done 2 to 5. But we said, no. What if tomorrow a fintech or an Amazon or a Google were to offer this business? How would they do it? Because that's the experience the client is used to today. And then when we went back, we said, how would we approach it differently? So it's the beginning of what I call the reimagination, which is we went back and we did a time and motion study of the time the file is actually touched. And here is where your UPS, FedEx, and the lawyers come into play, because an average bank sends the corporation a very heavy document ecosystem. They have to fill it, multiple people have to sign, then it starts traveling back. So here's where UPS and FedEx make a lot of value. Now, unfortunately, what will happen is once it comes into the bank, the first thing we do is we have different people who have to touch it, right? And one of the people who have to touch it is, say, tax operations. So the file goes to the whole docket, goes to the tax operations. They look at it and they say, hey, you actually filled out the wrong legal entity. The whole package travels back. Then it comes back after a few days, right? And by the way, every function has 3-day SLA, both sides, client side, our side, everybody's side, right? So it comes back, and this time they look at it and say legal entity is right, but the W8 form or the W9 form is actually not of the relevant year. Right? It's an older form that you used. Goes back again, comes back. And I'm just exaggerating for you to understand how the 67 days, actually the file was touched for 10 and a half hours through those 67 days, right?
Yep.
Through the various people. So we said if that is the real time the file was touched with a human in the middle, should that not be the starting point for where we want to get to if we can get it systemic? And that's how we started the reimagination. The challenge is, of course, and if I can spend maybe a couple of minutes to use this as an example for how we reimagine, we said we're not going to do just, you don't take a newer technology and make it appear 30-year-old, right? You don't do that. So if we have at our disposal newer ways of doing things, what else could we do to this process? So we said, yeah, a lot of people say they are digital in onboarding. But digital in onboarding means the way you were describing, Tom, which is I can upload those documents. I've kind of taken FedEx out temporarily from the mix, right? The reality is you've not solved for the process. So what we said, every part of the journey, front to back, we will reimagine digitally. When I use the word digital, it's not for the front end, it's for digitization or automation of the end-to-end process, right? So if we had to do that, then imagine three changes. One, the client has the ability to interact directly, and it's at their disposal. So the whole platform is at self-service at the pace of the client. That's when I'm putting you in control. But then when you're uploading, I'm not starting with you uploading the whole 65 pages or 150 pages. I'm actually saying, hey, Tom, I do business with you on my lending side. I do business with you on my market side. I do business with you, right? So you've already shared with me about 20 things in the past. In addition, a lot of public information is there that you post about your organization that's available, syndicated. So if I were to take both of those, then out of the 10 things I need from you, I already have 6 or 7 or 8. Let's start with just the 2. But merely telling them that is not good enough, Tom, because you won't accept that from the magnificent 7 that we talked about, right?
Yeah.
What would they do? We would do exactly that, which is we said, not only do we have 6 of those or 8 of the 10, here are the 8 that we have. They're available for you to review. And then we added the cool things of the technological availability, because in the past, we couldn't compute at this scale. We couldn't meta tag data. We couldn't kind of do unstructured, right? So little things, we now have the ability to tell you when they expire, when the document is. So as a treasurer, as a CFO, you don't have to worry about your audit trail. We actually have the document that you may sometimes struggle to find, right? So this is transformative in that little, absolutely narrow one moment of document, right? In addition, you send me your signers, right? I kind of need some degree of PII from you. I need your driver's license or your passport. Little things. Why would I not have the ability to read that data and tell you whether it's live, expired, or send you a little notification saying it's due for change? Simple little things. Similarly, as you're uploading that document, going back to my friends in tax operations, right? Why would I not check and validate that A, it's the right document, B, it's the right entity, C, it's signed by the person who's supposed to sign? Guess what? 3 big reasons why the document goes back, right? So all 3 reasons done, intelligently done, audit trail stored, and the process moves. But also digitally, we didn't stop by sending it to tax ops and then to sanctions, and then we said everybody gets it at the same time. All checks are happening in the system, but we will parallel process it. That is what allowed us to transform the operating model. As a result, we were able to offer the same day onboarding. That's fundamentally what we changed. And I must call out the fact, you asked me what had to change. It wasn't just the power of technology. You can imagine to bring such changes, you have to rethink policy. You have to rethink process. You have to rethink everything that's kind of, sacrosanct or held as the gold standard in the past, right? Everything has to be questioned. So that is really, which was the biggest change management journey that we had to go through. I just gave you the onboarding example, but that hopefully gave you the context. Now that economy of scale is no longer a constraint, it's actually a very convenient piece to scale up.
Well, it's a full even mindset shift as well in the banking world, I would say, to even start with. As a former product manager, someone in the product strategy, you're speaking to my heart there, right? Which is just starting at a very fundamental user experience level, going from A to Z. And I think anyone who's listening on this call that works in treasury, they all have experienced what you just said from an onboarding perspective. I mean, we talk about it all the time in the market in terms of how can technology ultimately help them. And really, it's the banks that ultimately are the ones that are holding a majority of that of that efficiency or inefficiency. Ultimately, the technology in the front end can only take you so far. It really reliant upon what the bank can or can't do. Let's move maybe on after onboarding, right? Another area of, I would say, challenge that most corporate finance teams and corporate treasury really struggle with is pricing transparency. Banks are reporting hundreds of different AFP codes every single month in terms of their various charges. Invoices are massive month over month, account by account breakdown. They're very, very detailed, but I think you joked you need to have a PhD in order to be able to read one. And yeah, I agree. I've looked at many of them. I think they're intensely opaque to say the least. How are you guys changing the pricing and billing model at RBC Clear so that CFOs, treasurers actually know what they're paying for?
A couple of context points, right? So when I said they struggle with the K and the KYC, they also struggle with exactly what you called out, which is the inherent transparency in the process. And billing is one manifestation of that. But it's also a challenge of not about the complexity of the billing, but the effective reconciliation and understanding what are they paying for, what value are they deriving, how do they actually make themselves efficient. At the end of the day, it's a large exposure for them as well. So the big questions are coming from, again, policy, right? So I say, why do I have so many hundreds of codes? Because if I built my business model incrementally, I had to figure out how I will get value for it. So therefore, how will someone pay for that service? So therefore, I have tons of services. But logically, Tom, if you are the treasurer and you are opening an account, do you need to come and tell me that you also need to move money from that account? And should I give you, so you have to come and tell me separately that you now need wire and then you need, and that you need access, or that you need reporting. I mean, frankly, that's a default bundle of the capabilities, right? What we need to have a discussion on is, hey, how much volume, what kind of scale, what kind of safety soundness, what kind of, places are you sending the money to, what velocity, what behavior patterns. That is where we are then becoming a partner for their efficiency and effectiveness, right? Otherwise, we are telling them, hey, here is my tool set. Now you figure out how to manage my tool set. That's not a service model. And that is inherently what's manifested here. Because not only is the document complex, it's because we are charging them on so many lines, right? But the experience is complex because can you imagine being a treasurer and saying, I'm being charged for the pipe, for the upload, I'm being charged for the actual transaction, I'm then charged if there is a pend or a repair, I'm then being charged for the report. Fascinating, beautiful. Yes, you can charge for everything. But is that the service that you asked for? The service included all of that. So we are trying to come up with what I call the logical bundles and allowing the customer the behavior-based patterns, right, in terms of pricing. Both of those, the challenge, of course, is that the industry doesn't buy this way. So we are headed against the grain of the buying pattern of RFPs and, being assessed over those several hundreds of AFP codes. But the clients, once they understand what we are doing, are actually very thrilled because we are simplifying their life. We are taking away things that they don't need to worry about. And we are letting them have time and energy and teams to focus on the things that matter to them. So that's kind of a quick example for you. We also help them kind of now take it all the way through traceability. It is a digital document. They can click through, they can actually reconcile all of the good stuff that needs to come because today technology can enable it. To your point, technology wasn't the limitation. It was our product management mindset or our willingness to reassess the flow. So that's effectively where we've taken it.
When it comes to those fees, so often it's like when I'm out in the market and talking to corporations and corporate treasury, it's just a given. Sometimes you oftentimes hear customers or companies saying we analyze it when we can. Sometimes we get to it, sometimes we don't. But to me, it's just like a given, and we understand and we know that there's so much inefficiency inside of that. And I think the customers of the banks know that too, but the ability to get to it is extremely challenging. I mean, in some situations, you'll find that there'll be dedicated people that are just solely focused on that within a corporation, which to me is kind of crazy in 2026, right? With how the world has evolved. But it does speak to bank companies basically trying to adapt to the inefficiencies that the banks have imposed on them. At the end of the day, like we can, put on our capitalist hats here for a moment, right? On those inefficiencies, banks make a lot of money off of that, right? And since you're kind of removing that, I want to walk through a little bit of your mindset and your model there in order to the decisions you've had to make. Like, why did RBC choose to actively kill those inefficiencies, which ultimately are yielding, money perhaps for other banks, perhaps.
Tom, I think this is where good organizations, and I know, we talk about organizations that are actually anchored in doing right by the client. If I have the ability to do it better, right? This is not just about the income that I make. Every part of the change also changes the risk that we are introducing into the system, the risk of the money movement, the safety and soundness for the client, safety and soundness for the bank. There are all these pieces that come together, right? So there is a benefit for everyone in the ecosystem starting from the client. But let me play it back to you slightly differently. When we were talking about the operating model, and this is where, you see all the logical pieces of the operating model getting discussed. One of the things that you and I have both seen in this industry for a long time is the average bank has an army of people sitting in operations. Because one of the pieces that you didn't call out as we were talking is the fact that when you're a treasurer, right? Yes, you've gone through the onboarding excitement. You're finally up to doing business. You now have another 60 days to actually get the payments tested and files tested and host. And then you move into actual transaction. But in each of these, there is kind of significant friction. But when you move into the transaction, in your personal life, you send it on Zelle, you send it on Velmo, you send it on Wise, you send it whatever else. You get proactively, like Amazon tells you, where are you in the journey of the buying? Where is it that your process is? Have you dispatched it? Is it about to get delivered? Hey, it's with you now, and here's the proof. Doesn't happen when you are a corporate treasurer. You upload your file, or your system to system file goes. After that, you're hoping that it reaches the other side.
Mm-hmm.
You're hoping the payroll file made it all the way. You're hoping that the employees got paid. You're hoping that the dividends went across. You are hoping, because it's a black box. There is no actual traceability in that model, right? Now, one way of thinking about it is traceability, but the other aspect of it, the flip side of it, is that the corporation which is buying this service from the bank is busy chasing the bank down for where is my money.
Yep.
And that is kind of, the inefficiency is sitting there. Fundamental question is that the right way to do it? So we said, what if we were to remove this problem, fundamentally tackle it? We know exactly what we need. The client knows what they need. Why can I not kill the reasons for the calls? You know this from the industry. Almost 8 of the 10 calls are effectively, where is my payment? Right?
Yep.
Various formats of it. And then there is the whole idea about the ID not working, or certificates expired. That's the tail of it, right? So if we can prevent, is that a better way to do it? And we said we will take a shot at it by rethinking the operating model. And Tom, what we did is we looked at all the typical reasons why you have to call. And systemically, we took those pieces and we changed the processes from a design lens. 3 simple things we did. At the upfront, we actually created intelligent entry points and validations. Second, we said we will check for things that are coming in terms of process, but also in terms of intelligent rules, right? And finally, we said we will give full traceability by having an event architecture. So the client will receive from their current model, which is reactive, because the servicing model is reactive. Only when the client hollers, I show up. We're going to flip that and move from reactive and inbound to proactive and outbound, which means I will inform you where your money is. I'll inform you if I've got the file. I'll inform you if 10 of those payments in the file are not working. I'll inform you what I'm doing with it, and I'll tell you when it's done, right? But I'll also tell you if you need to take action. So you have no reason to call me. Yes, you're welcome to engage with me, but frankly, think about it, all the great products, we become part of their life as a customer, and the customer forgets we exist. That is the best state of any product. So how come in our product, we are always busy trying to get the customer to be always engaged, and unhappily so, right? So that is what we attempted, Tom. I'm still what I will call a fledgling in the business, right? I do want to remind you that as much as we are transforming or attempting to with the client's journey, we are still relatively a toddler in the ecosystem of the business model. With the 24 months of business that we've had and fairly large scale penetration of our portfolio, we have still not published our 1-800 number. There has been no reason for the client to call. So it can work. Now, yes, with scale, maybe a few things may evolve, but at this moment, I have no client facing ops. My only ops team is actually process designers, and they're available for the business continuity, just in case, right? Tom, does that mean that I'm leaving money on the table? No. Because if this is how you want to make the money from the client, no. I would rather make the money by adding value to them. And through this model, there is no shortage in terms of the wallet that we can access. That's the right way to do it in my head.
By doing that, you're truly, as we would say, sticky to a customer. Why would they ever leave that? And obviously, growing their business with you is where the value comes into play, as opposed to trying to, nickel and dime at a transactional level, like we were talking about. From a integration perspective, the best integrations are the ones that you don't feel, ultimately, the ones that you don't know about, and that's obviously the goal from any side, whether it's on the bank side or on the technology side. If we go from kind of the vision to, let's talk more about the results a little bit, because my product mind is going into, and you talked about architecture and things like that, internally at the bank. You're taking account opening down to same day. You're taking host to host connections down to 15 minutes. I think in order to do that, you had to break down some stuff in order to get there ultimately. So like, what did you have to break internally to make that kind of speed possible for the customer?
So, fantastic question. I kind of briefly alluded to the fact that the biggest job I've had over my time here has been change management, right? And change management at all levels, right? Within the organization, across my stakeholders, across the policymakers, and all the way through to the client as well. Because we are trying to do something that's valuable. It will look a little bit, it'll sound a little bit of what I call philosophical, Tom, but I will go there. People participate in change when they see what's in it for them at the end of the change. And I'm going to connect this dot for you in different ways. This is one of the largest organic investments by any bank, any large GSIB bank in this space in quite a while. You can imagine I'm theoretically sitting on a pot of money that has never been put into the system for building new. Maintenance is different, right? Keeping lights running is different. That scale is there. So if that's the case, we have two choices. We have the choice of going inside a large organization and building it like a little island of excellence and disruption, in which case the rest of the organization doesn't benefit and you don't carry people with you. The other challenge, which is a little larger challenge internally, is to carry the organization and let everybody benefit from the change that you are leading. We chose the latter. I call it the gratitude with generosity model. And how did it translate? One, all of us, assume always that our business models are unique and what we do is different from everybody else. At the margin, right? But inherently the customer buys the same way, is buying the same thing. This is a highly commoditized product ecosystem, right? So if that is a starting point, then why do we need to reinvent everything? So we said, if my business architecture is about changing a few things, one, I want to give frictionless and I want to give transparency and traceability, right? But I don't need to change the way I do my sanctions assessment or my KYC assessment or whatever. So I'm using existing infrastructure of the bank, but I'm sequencing it differently. I'm changing the policy to accommodate it, and I'm changing the timelines from human in the middle to human only as a validator. So those are all pieces of the change. So effectively where I'm going is that good 60-70% of the infrastructure was the best available across RBC, and RBC is a behemoth, right? They are at the cutting edge of so many pieces across, consumer, commercial, insurance, all kinds of places. So the opportunity to corral those capabilities and bring it together in an assembly and not having a not invented here problem was one of the big opportunities. The second flavor of that is to constantly push the organization to do what's valuable long term. So you're putting your money in somewhere. So I'll connect it with the same onboarding example. We could have built something specifically for the cash management business, but we didn't. When we changed the onboarding model, we said this has to be available for all of capital markets. Once done, it has to be scalable. So we forced the organization to rethink the end-to-end client life cycle. So it was a little painful initially, but once they saw the value, it became an organizational prerogative rather than just a cash management. So little pieces, and I can give you examples all through. We're the first business which is fully digital native and cloud native. We are completely 100. Nobody else in the marketplace on a core banking payments business model is fully cloud. We are, which means educating everybody in the ecosystem that you're going to run what's technically called hot, which means you're live at all points of time, right? Always available. Little things, but you know what challenge, Tom? When you do that, how do you do end of day? You're taking a system that can run 24/7. Now you take it backwards to have a batch end of day. You have to take it. It's a very interesting dynamic. So that is what we did. So I gave you a longish answer to help you understand that the change management was the biggest thing internal with the policy stakeholders, partners across the ecosystem bought into the story because they were able to do things that they always wanted to do, but did not necessarily have the opportunity to do. So we've done many, many, many innovative things in this process, but it wasn't just about the US cash management, just wasn't about Clear. It was about what we could carry forward. And I can give you multiple examples of how RBC is now reusing many of the build components in different parts of the organization. So that is the foresight the management team had.
I could envision that, because what you just said, I think, is super interesting, and I think very topical for where the world we're in. I would assume that the work that you've done is laying a great foundation for this evolution. To your point, what is end of day, right? There is necessarily no end of day, but we've gone from the legacy ways of working where all things were driven by that, and then in turn everything is batch driven. So as we see the world evolving, there is a continuity of things. There truly isn't an end of day. Liquidity moves from the east to the west and then back again, right, throughout the day for global organizations. So I think our mission, and I don't ever use this, and don't use the podcast to really talk about Kyriba, but our mission is to drive and empower treasury and finance teams to actively leverage and lead with liquidity, to manage working capital, not be distracted with banking relationships. And I think that's, oddly, I would say, your mission ultimately as well. And you said, I think when we were talking, that you believe that treasury needs to be a part of the commerce flows, the ones that drive profitability ultimately. I would love to kind of hear from you. What do you think that looks like in practice for a treasurer or somebody who's in treasury today going, I am so far away from that because I'm the one who has to sit there for 60 days and open up the next bank account?
The world is evolving, right, in very exciting ways for all our corporations that we service, right? We all know treasury is always a cost center view, but cost center views and clunky process, right, are not necessarily what we get excited about every day. Their primary job is to enable just in time, very efficient, high yield working capital for their businesses to be able to invest, to use that capital in ways that actually grow their business. So I'll give you a little color, right? We all talk about, and this takes me back to my customer advocate. When I learned my basics, you were a product manager only as good as your manufacturing abilities, all the way to your ability to get the money back home, right? It wasn't just that your brand was your story. You did everything. So if you think about a cash to bank life cycle, I'm today talking about a situation where I'm servicing, if I'm treasury, I'm servicing the bulk flows of standard payments. If I'm, say, for example, and I'll take Microsoft as an example, I have my software business, but I also have PlayStation, right? In my app, I can actually now, during the game, I can buy things, right? How do you make sure that you are partnering with your business person to say, hey, you don't have to worry about that payment experience and it won't be friction driven? Because I'm going to work with you and create the opportunity for that money movement to be seamless and unfelt, whether it's happening, whether through a wallet, through a regular payment instrument, through whatever other form, cross-border, micro payment, nano payment, doesn't matter. Now that understanding, that change, why do you need someone in the middle? Treasury understands money movement phenomenally well. They understand. So this is a flip in their own role. As much as I'm talking about reimagination of the platforms, it's about them giving themselves the permission to impact the business and not worry about just safeguarding the back. So my view is that's one example. You can actually look at the other side of the example. They spend all their time managing the bank and managing the reconciliation of their business model, right? There is always the opportunity to take away what I call the MIS, or the management ledger versus financial ledger, or the payment ecosystem ledger gap, and create seamlessness. So there are various ways they can focus on supplementing and complementing their business model. Therefore, they no longer remain cost centers, but they remain enablement centers, or they become transformation centers. And you experience it from where you're sitting. That is the way the business wants to deal with you. And that's effectively the opportunity. So that to me is real. It's happening. It's happening in pieces. I've experienced clients who are already thinking this way. And our job is to make sure they have the tools and the infrastructure and the frictionless experiences to be able to deliver that to their internal clients.
I would say the appetite is certainly there in the industry. I think it's been there for quite some time. I think the opportunity is probably more realistic than it's ever been when it comes to that. But in so doing, there's a lot of, I would say, diversity in terms of the maturity along that scale. But I would say more than ever, from our side, on the technology side, it's certainly prevalent in terms of that transformation. It's quite amazing to be a part of too, I would say, to kind of see Treasury go from that operational cost center to this really enablement and value driver more and more. And I really kind of see that rapidly changing here as both the technology changes, as banking partners change, like yourself, ultimately for them. So I think quite an amazing story, quite an amazing journey, I think, thus far for RBC Clear. And I probably would assume a lot more to go ultimately with your mission at hand. Let's take a couple minutes, kind of talk about you, because again, I think you have a really fascinating background, versus a traditional banker, for example. And going back, I would say, let's start going back to your kind of foundation and the experience that you had at Unilever in the 90s into the 2000s. What's something that you learned, selling into that world of consumer goods that still applies to selling today but on the corporate, banking services side of the business?
I'll say the inherent buyer the same. So if the buying mindset, the most important thing is Simon Sinek has a way of saying the why, right? But much before Simon Sinek called it the why, what we learned, and I call it what's in it for me, because the so what of the business model. That's what the consumer or the customer mindset helps you understand, because too often we are caught up with what is it that we are doing. They are caught up with what is it that they don't want to do or they want to do.
Yeah.
Right? And we are very, very often not connected. So the so what, and I talked about it through the change management behavior. So I've carried that all through. I start from saying what's in it for them. How are we making their life better? And then I wrap it backwards, right, in terms of the business model. So I'm not attached any other way. I've carried that, and that's what gives me, I wake up every morning with that excitement.
Again, spoken like a true, I would say, product manager at heart there, it sounds like, ultimately. I'll ask a provocative question. Definitely interested to hear your opinion on this. What's one piece of technology or trend in banking right now that you think's overhyped and one that's underhyped?
So I'm going to give you an answer that you were not expecting then, right? I'd say it slightly differently. Over the years, what I've learned is technology is only as good or as valuable as what the business case or the business intent or the need that you're solving for. Too often, we hold the technology as cool or uncool. Technology is evolving. The capacity is evolving. The power of that capacity, how to harness, is in the person who defines the business value proposition. You called me a product manager at heart. To me, if I am ultimately using that to do good, the good can be in a individual life, it can be in, doing good, it can be in business. But it's the person who's defining what I do with the tool that makes that useful or not useful. So I know we are all talking about things around us that are very cool. To your latter part of the question, I'll say, can you ignore what's happening around us, the power, the transformation of what AI is bringing, the generative AI is bringing? And I've been talking to a lot of people, including peers of mine, who are worried at times, right? I mean, in the ecosystem, saying, what's going to happen? And I use technology examples to talk about our lives, Tom. So I'm going to give you one. My career, right? 30 years, if I say approximately 35 almost, but 30 years of career. You can look at 30 years of career, 360 months of career, whatever, 1,500 weeks of career, right? There are people amongst us who have done 1,500 times the same thing. They have done it over and over and over again. They have become very good at it, highly skilled at it. But that's agentic AI, Tom. That is what is going to happen to them, right? Very soon, because that is a process that is repeatable. It's got good governance rules. It's got the methodology. It's well boxed. There are those amongst us who've taken that and kind of gone beyond, and maybe we've learned a little more, right? We've not spent all the 360 months or whatever doing the same and expanded, right? We have the opportunity to be in the middle. We've done the machine learning part of the journey.
Yeah.
And then there's the third category. If we've truly learned beyond what our function line capability was, then we've become the LLM today. And all those three are going to coexist at this moment. That's what each one of us is facing at our business, in front of us, staring in front of us, in our personal lives, in the ecosystem that we see. So to me, change is around the corner in a massive way. But the opportunity is for us to lead it, drive it, harness it, not be kind of overwhelmed by it or afraid of it. It's about embracing. So that's the way I look at technology. I'm a big fan, as you can make out.
I can tell. Yeah, no, I can tell. I'm not terribly surprised by the answer. I think our views are the same. AI is not the automator. AI is the coordinator ultimately, right? Is the piece that kind of holds together. And that's the agentic experience. Ultimately, we see it on our side. And I think you're probably seeing it more in the opportunities on the banking side as well, in terms of all the areas that you continue to address and the removing of the friction. Ultimately, that's what coordination ultimately is. I guess last question. We always like to hear from the guest, the human element of things. You're living day to day in again, in the banking ecosystem, highly regulated. I'm sure that controls a lot of your mindset, but what do you do to decompress, to get away from that for a little bit, I assume, at least?
You'd be quite intrigued by the answer. Music and podcasts. What I find fascinating, Tom, and I think now that we've had two conversations, you know me by now a little. I'm enamored by consumer behavior. I'm enamored by people. I watch people. I dig thoughts. I dig when people can stretch the imagination. And for me, that's actually what excites me. So I listen to a lot of podcasts which are not in my business area, which are not to do with anything that I do, but they just stretch my mind and they make me think in a different plane. And then it inevitably leads to a reflection. That's very powerful. That's usually my go-to by default.
I like podcasts too. It's what I do when I'm exercising, things like that. And again, I don't listen to in my domain. I like to listen to other things. Any recommendations outside of this one, of course, right?
No, I actually, you heard Simon Sinek from me for a bit, right?
Yeah.
A bit of optimism, Adam Grant's taken for granted. They are like closer to the business end, but they are people thought processes. At the other end, for me, as the personal journey has evolved, mental health, spiritual health, health in general is a big theme, right? Because we're not discovering. So I look at some of that. So Jay Shetty comes up very much top of the list. And then there is a spiritual angle to, as we've all grown, and I know your podcast is not focused there, but as we've all grown, I believe that I've had an unfair share of good in life. I'm very grateful, right? And therefore, it makes me wonder, what did I do to deserve it? So the spiritual side of things, how to kind of evolve through that journey is the third bucket. So that's the three buckets I kind of typically listen to.
That's awesome. I can relate, I would say, to that. I think it's an awesome way to actually kind of humanize the work that we ultimately are doing as well, when you kind of ingrain yourself or kind of either read, listen to those types of things. Again, at the end of the day, to your point as well, what you've been kind of echoing, at the end of the day, somewhere behind that decision, inside that in the treasury function, is someone who's looking at something and what's in it for me at a human level. And I think we always have to kind of remind ourselves of that. Kartik, excellent conversation. Thank you so much for being here. Anything last parting words to keep up with you, keep up with RBC Clear, learn a little bit more?
I think we are out there, Tom. We are learning. I would say, especially the audience that you attract, I'm hoping that some of them will step up and participate in this journey, because as we are building, we are not building it for RBC, we're building it for the client base. We would love to have the opportunity to do it right for them and do it in ways. So that's what I would say. But I'm extremely grateful, Tom, because this is my first podcast ever. Managed to get me out of my comfort zone. So I learned something new today. And thank you very much for the opportunity and the very energizing engagement that you always bring.
You're a natural. We'd love to have you back again to see how things are progressing. I think the world's changing. I think this conversation could be different in a year with some of the advancements that are occurring. So I want to thank you again, Kartik, for being here. Really enjoyed the conversation. I want to thank everybody else for tuning in. To never miss an episode, subscribe wherever you listen. I'm Tom Gavaghan, and this is Liquid, how CFOs outperform.